Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. Looking back about a month, it's a good day to do a very quick, like 30-second review. Very tight Bollinger Bands. We discussed that we would be going on a band ride. We didn't know which way, but we knew whatever way was going to give us time to get in, and it was going to go for a while. The market decided that was going to be down. We did a move to the lower band, a bear market rally up to the middle band here, the green line that failed. Then we continued on a band ride that was 9 days long. Following that, we did another bear market rally after interacting with the gray line here, which is the third standard deviation band. That failed. Back up here. We did 3 days at the 50-day exponential moving average. It failed. We retested the 50-day. That failed. Went back to the lower band. Then we did a big bear market rally on the 8th, which at the time we said looked a lot like the bear market rally on the 24th of September. And then the 25th of September, just like on October the 9th, we failed at the middle band, and we failed very, very hard. This moment in time here was really the last chance for the bears to take this market back and save their uptrend. At the point the market failed there, we discussed in subscriber webcasts and the excerpts of which I put out on Twitter and up for everybody to see that, you know, the purple line there, the 200-day exponential moving average, was going to be a magnet. It was a magnet just as it was on the Russell, and just as we did on the Russell, it broke through and it broke below. Then it closed below. Yesterday, it tried very hard to get it back. We did a full test. We did a high of 1906 in the morning. We then did a lower high and tried to hold 98, which was the 200-day exponential moving average. Once that area was lost, the selling rapidly accelerated. We took out the lows from Friday, and we traded as low as 63.75. For the first time since 2012, price to the downside extended to 70 handles from the 45-day pivot. Now, those of you that have watched me for a while, that have been members for a while, that have known me for years, know that that area I have termed to be Crazytown. Crazytown is when peak price or trough price gets 70 handles from the 45-day pivot. 45-day pivot yesterday was 1934. Low price was 63.75. So what we did in the room was we got long. I got long 69, and I added 66 for 67.5. I've taken some of that off. I just took more of it off up in the 80 area, and I'm still holding half of that with a 68 free ride stop. So we traded that fade because our levels gave us an area that tends to be faded, which is that 70 handle mark. And basically now we have our risk out. So what are we looking for today? Well, we're spending our third day so far in the channel. We're trying to get back above the lower band here. We'll have to see. We didn't do a third standard deviation hit yesterday. It was down, you know, it was just too much. That would have really bounced the market. I have to view now the purple line there as resistance, as a ceiling, as something that's going to contain this bounce. Because if we're following the playbook of the Russell, you'll see that once the 200-day was taken out in the Russell, that, you know, it never got it back, and it still hasn't got it back. So I'm looking for a little bit of a bounce. We remain in sell rallies mode. The most dangerous thing you can do right now is think that this is 2013 and that we're going to V from here up to new highs, because the chances of that happening are remote. All that time that we have spent saying the bears can't do this, the bears can't do that, look, the bears can now. They've been doing it for a month. They have been asserting themselves again and again exactly where and when they need to, at the middle band. There will be another bear market rally. It will be violent. I hope it's today. They come out of nowhere. I'm long and prepared for one. But when it's happening, you have to view that rally as an opportunity to get in a position to sell the market again, because that's the environment in which we're existing. Okay, so everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, princetontrader.com. Check out the chat room. Come trade this stuff with us. We had a very nice short from 97 that we covered down below, and now we're long. We'd love you to come in, meet, and check these setups out with us. I think you'll like what you find. I'll be back tomorrow morning with another webcast. Trade them well, everybody.